What's going on, traders? My name is Dillon. Welcome back to the channel and yet another episode of the MetaTrader 5 series. Now, apologies as I haven't been able to upload because I have been away and I have been working on other projects. Sometimes life gets in the way as well, so I haven't actually been able to upload. However, nevertheless, we are going to be smashing out content on this series so that way we have an expert advisor that trades the markets for us, particularly if you're following along a MACD trading strategy, which we'll find out will be either profitable or not profitable. However, nevertheless, we are going to be using this as a tutorial guide so that way you can create your own trading strategies within MetaTrader 5 and expert advisors within MetaTrader 5. So what exactly are we going to be doing today? Well, we're actually going to be adding in several conditions to our trading strategy because if you recall from the last episode, we only have a MACD indicator, which is taking signals based on the crossover of the MACD and nothing else. However, of course, wouldn't recommend trading this. So we need to actually add in additional filters and additional conditions to our trading strategy so that way we can hopefully make it profitable. Now, if you've been following along with my trading view series, you will know that we've been playing around with the MACD indicator a lot, particularly with 100 exponential moving average. So we're going to be coding that one in today, as well as an additional condition where it takes the crossover, or takes into consideration where the crossover of the MACD actually happens. So for example, if the crossover of the MACD happens, or if a bullish crossover of the MACD happens below the zero line of the MACD indicator, then that is going to be a signal to go long. And then likewise, if we have a bearish crossover of the MACD indicator above the zero line, that is going to be a signal to go short. Now, if there is a bullish crossover above the zero line, we're not going to go long. And if there is a bearish crossover below the zero line, we're not going to go short. So hopefully you've been following along and have watched my previous episodes of the TradingView series, so that way you'll actually know the trading strategy. And again, this is a trading strategy that we have found from Trading Rush and others within the YouTube sphere. And we, of course, have tested that one out on TradingView. However, we are going to be testing it out on MetaTrader 5 and comparing the pair and seeing what the differences are. So that's what we're going to be coding in today. Again, they're just entry conditions. However, the particular thing that I want you to, I guess, note here is that we are going to be using the iClose function to get the close of the previous candle. And this iClose function is a double function which takes in the symbol, the time frame, and a shift. Don't have to really worry about the shift. We're not going to be using that one today. However, it's of course going to be taking into consideration the symbol and the time frame. Now, the reason why we're going to be using this is because we need to get the position of where the candle has closed in relation to the exponential moving average. So for example, if the candle closes above the exponential moving average, that means that we're going to be looking for long signals because the trend will be long. Now, likewise, if the candle closes below the exponential moving average, then we're going to be looking for shorts. Now, remember, this is a filter and not a trigger. The trigger that we are going to be using is, of course, through the crossover of the MACD. Now, again, hopefully you've been following along with my previous videos because you would understand all of that. Now, the resource over here, again, from the MetaTrader 5 library. However, I will leave a link in the description for you to go check that one out if you want a little bit more substance to what the iClose function does. All right, traders, now we are back in MetaEditor. One thing to note is I hope you like the little circle thing that I've got going on here. I think it's actually pretty cool. It was suggested that I do reduce the size of my face and my body because it was taking too much room or real estate on the screen. So I have, of course, reduced that and I've made myself into a little circle. Now, and the other thing as well is that I've tried to zoom in a little bit so it makes it a little bit easier for you to read. So I've experimented with the display settings and I have made it a little bit bigger so you'll be able to see a little bit more of the text, as well as when we are testing our expert advisor, you'll be able to see a little bit more in there. However, with all that being said, again, I hope you've watched my previous episodes on this series so that way you, of course, are up to speed because we are going to be carrying on after that. Now, this is what we've done, and I'll just quickly go through, well, I guess the substance of what this code actually does. Now, again, this is a MetaTrader 5 expert advisor, which is actually utilizing the MACD trading strategy. And when we are going long for MACD signals, we are looking for a bullish crossover. And likewise, we are looking for a bearish crossover of the MACD signal to go short. And this is essentially what this code does. Now, what we're going to be doing today is adding in an additional indicator, and that indicator is the 100 exponential moving average. Now, the beauty of that is we have already set up code within our trading strategy for our MACD, and this episode is going to be more or less copying and pasting. Now, the first thing that we we actually want to do is, well, we're going to start off from top to bottom, but set up our global variables for our indicator. Now, again, we're going to be using the 100 exponential moving average. And in the last MACD video, I did set up a little bit of a checklist for you to follow. So please feel free to go back to that video so that way you're following along with that particular checklist. Now, what we're going to be doing is setting up our holders and our variables, similar to what we have done over here. And what I'm going to do is just copy and paste in just some code that I have off the side. Now, the first thing that we are going to need is our handle, which we have got over here, similar to what we've used in the MACD. And the second thing is our parameters or our variables for our indicator. Now, for a moving average, and for most moving averages, they take particularly one value. For this value, it is the period of the moving average. And again, we're using a period of 100 by default. Now, similarly with the MACD, we had more variables. We had 3 in total, which was the MACD fast, slow, and the signal. So that's why we've got 3 values over here. Now, this one, we of course only have 1 because that's the period of the exponential moving average, and it doesn't need anything else. So that's all we need. So beautiful, that's all set up. Now let's move down to the code. Now, on the onInit function, which is our next section of the code, and that again is on the initialization of the expert advisor, we need to set up a handle for our exponential moving average on the onInit function. Likewise, we've of course done this with the MACD. So what I'm going to do is actually copy this code because I've already done it here, paste this in over here, and just make a few changes. So this is for the EMA indicator. Now the handle is not the handle MACD, but the handle EMA. Again, we've made that over here. IMACD, we're not using IMACD, we're actually using IMA. Now IMA is the standard function built in within MetaTrader 5 for any, well, for most, well, some, not most, some moving average functions. Now, what we're going to need is actually to cancel all of this, because of course the function is going to be different depending on the indicator, and we can start again and code it in from the start. If I can type, there we go. Now, what are we going to need? We're going to need the symbol name and the time frame. So more or less, this is always going to be the same, at least for the first 2. And then we can populate the rest. We need an MA period, and the MA period we've got up here as a global variable. I'm going to copy that across. We need a shift. Now, we're not using an MA shift, so that can just be 0. What is the mode of the MA? We're using an exponential moving average, and we have some other options down here if we want to, but we're just going to be using that. Oopsies. And we need the handle or the implied price, or what we're using up here, which is how are we calculating the exponential moving average, and that is based off the candle close. Now, we have this function here, or this variable here, called input applied price. So I'm going to copy that, paste that down here, and notice we've got the same thing up here for the MACD. So this is basically telling us that we are going to be calculating a 100 exponential moving average based on the closing candles of our, of course, symbol and time frame that we are trading it off. Now, the last thing is just a print statement, just to say that our EMA for this particular symbol for this period has been successfully created. Now, let me compile this just to make sure that we've got no errors. Good, we've got no errors. That means we've done everything right so far, hopefully. Now, the next part is the onInit, and basically we just need to release the handle after the deinitialization of the expert advisor is completed. So what we're going to be doing is copying this, pasting this, and again, changing that to handle EMA, compile, done. Beautiful. So we have set up our exponential moving average handles appropriately, so that way, and our variables, and so we can of course move on to the next step. Now, the next step is to put in some conditions for our exponential moving average, and that is going to be done within over here. So after the new candle is received, again, you would have probably watched my previous video which showcased how we calculate whether a new candle is received. We're going to be doing the trigger first, which is our MACD trigger. So the next thing that we're going to be doing is our filters, and the first filter that we're going to be doing is our exponential moving average. So if I can type strategy filter EMA. Beautiful. Now, again, we can copy most of this. However, what I'm going to do is go through it first. So I'm going to go through the MACD, I guess what we've done for the MACD, and then we're going to be putting in the rest for our exponential moving average. So just for the first line, we have declared a string variable, and that string is called open signal MACD. So I'm going to copy this across. However, I'm of course going to be changing this to open signal EMA. And this string is going to be equal to get MACD open signals. Now, this is a custom function that we have calculated in here. And see, we can see this over here, get MACD open signal, get MACD open signal. So basically what this function does is, well, calculates whether there is a open or whether there is a long or short condition or no trade at all every time this function runs. And so every time essentially there is a new candle, there is going to check whether there is a new trade that is going to be traded, and whether there's going to be, of course, or whether we're going to go long or short based on, you know, certain conditions. Now, what we're going to do is copy this, paste this, but of course we're going to be changing this to get EMA open signals. So we're going to be making a new custom function called get EMA open signals. And that is going to, of course, run our code based on certain conditions. We are going to be looking for long or short conditions, or again, no trade. Now, before I do anything, I'm just going to copy this last line of code over here, which is our string concatenate for our indicator metric. So that basically every time we run our expert advisor, there's going to be call out box when we do run it, which basically says whether our EMA is telling us to go long or short. And this is just good for checking to make sure that our expert advisor is working properly. So we're going to be copying the code again, string concatenate, but remember, we're going to be changing this to EMA. And remember to change this as well to open signals EMA. Beautiful. Now, what I'm going to do is add in a comment up here as well, just quickly. Now, what this comment is going to do, or well, what this line of code will do is will return long or short bias for if close is above. So this is the conditions that we're going to be using. If the close is above EMA, or above, well, above, below EMA. I won't actually say what the conditions are, whether long or short condition. I'll just keep it pretty generic over here because we can change that in the future. Now, one thing to note is we've got this, or we've created this, well, lookup for this custom function over here, which is called get EMA open signal. Now, if I compile this, we're going to have an error. And the error is basically saying that, well, we don't have, or open signal EMA is actually not a declared, well, not a declared identifier. And that is because this get EMA open signal function, custom function, is actually not declared as of yet. So we, of course, need to actually create our get EMA open signals within our expert advisor. Similarly, how we've done this over here, get MACD open signal. Now we need to do the same thing for our EMA. So what I'm going to do is go to our custom function section that we've created over here and create a new line just under the MACD section that we've got. So to create a custom function, we need to declare it, or what is it going to be returning? It's going to be returning a string, because it's going to be returning whether it's going to be long or short or no trade based on a string or text type. And I've just copied get open signal MACD, or EMA, sorry. And all we need to do is put in these curly brackets. And just to test it, we are going to return let's just return no trade, and let's hit compile. Now I've still got a couple of errors. Open signal, is this right? My bad. This should be open signal EMA. There we go. Compile, and I'm missing a semicolon right here. There we go. And that's the reason why I like actually doing these codes live, because we can of course check for errors, and that is of course the, well, how you would check for errors. So Our code is now working. We've compiled it. I'll just show you again. We've compiled it, no errors. And that's because what's happening is this variable open here, open signal EMA, is now looking up this function called get EMA open signals. What does this function do? Well, it doesn't do much at the moment. All it's doing is telling us no trade. However, we of course are going to add to this in just a moment. Now, what we want to do is, well, understand exactly what we're doing over here. And we're going to be doing, again, a lot of copying and pasting. Now, we're going to populate our custom function over here first. I'm going to copy this first bulk section over here, which is just setting up our custom function and some of the variables within our function. I'm going to move that one down and paste across what we have from our MACD. Now, what we have here is our string, which is our current symbol, and that's just getting in the symbol that we're currently on. The starting candle. Now, this is the starting candle that we need to use for our copy buffer. And of course, if you watched my previous video, you would know what this is. Now we're going to start from candle 0. Now, this is an important one that we're going to be changing. We're going to be changing the required candles from 3 down to 2. Now, the reason for that is we're not looking for crossovers. We're just looking for a position of where our previous close, whether our previous close is above our exponential moving average or below our exponential moving average. We don't actually need to look for a crossover. So that means we actually don't need to look for 3 candles before. We only need to look at, well, what's happened on the previous candle. So that's why we're using required candles 2. Now, this index MACD and index signal, buffer MACD, buffer signal. Now, if you recall in the previous video, that is because the MACD has 2 outputs, which is our MACD line and our signal line. For an exponential moving average, and again, for most moving averages, there is only 1 output, and that is, of course, the moving average line. So we can remove one of these. So the signal, let's remove the signals. So then that way we only have index MACD and and buffer MACD. Now, of course, we don't have the MACD, we have an EMA. Same with the buffer EMA. And this is, of course, the EMA line. And the buffer is returning not the prior, but just the current confirmed and the non-confirmed candle, because again, we're only using required candles of 2. So we can actually remove just this comment called prior candle. So we are only going to be returning current confirmed and non-confirmed. Now, again, we can actually use just 1 if we wanted to. So we can actually change this to 1 and start from candle 1. However, just for simplicity, we're just going to be using that just to keep the convention. So that's all set up. Let's see if we compile, no errors, even better. So we can go to the next section, and that is going to be over here, and that is going to be setting up our copy buffer. So I've copied that across from our MACD. Now, again, we don't actually have the signal because we are only copying 1 set of parameters or outputs, I should say, into an array. And so we're going to remove that and remove signal. Easy. Now fill EMA, copy buffer. Now what we've got here is handle EMA, index EMA, and buffer EMA, and all of that is going to be the same. Just for this, for 2 candles, just because we're reducing it from 3 to 2. So fill EMA, and now this is just our error checking whether our copy buffer has been filled or not. If it hasn't been filled, then it's going to return an error, and this will only happen on the initialization of our expert advisor, and well, really shouldn't happen anywhere else. Compiled it, and that's good to go. So the final thing that we want to do, of course, is now get the position of our EMA. Now, what we've done here for our MACD is got the current MACD signal, the current MACD, the current signal, the prior MACD, the prior signal. Now, remember, we're not using the signals, and also remember that we are not using any of the prior candles as well. We're just using the current confirmed candles. So all I need to do is actually copy one of these and paste it down here. And what this is going to do, let me just put in the comment. Get Whoops. So all this is doing is getting the current confirmed EMA value. EMA. Nope. Lowercase. Now remember, we're using buffer EMA from 1, which is, well, remember we're using 1 because we're not using the current unconfirmed candle. We are actually using the current confirmed candle, so that is going to be index number 1, and we're going to be normalizing double or rounding it based off 10 decimal places, because I found that rounding it any less or even rounding it to digits actually produces some errors. So just to be safe, I've done 10. Might not be the best way, but it's what's worked for me. Now there is one other thing that we do need, and that is to actually get the, well, where the close is from the previous candle, and that is what we're going to be that's where we're going to be using iClose. So what I'm going to do is actually copy over some code and put that in over here. Let me reduce that, and I'm actually going to need to change that to 10. And let's actually go through this. Now I've created a new double, which is called current close, similarly from current EMA. And well, essentially we're using the normalized double, and that's to round it to 10 decimal places. That should be fairly familiar. But what's happening in the middle is what's important. Now we've used the iClose function, and we've used the function based off the symbol. So we need to give it the symbol, and that symbol is what we're actually trading. The period, and that's the period that we're trading it on. And remember, this is that shift, and we're not actually using any shift. We're using 0. So basically what this function is going to return is the current close that happened on the previous candle. So every time that the calculation will run, it will actually check to see what the previous close was, or I should say what the current close is of the last candle. And that will of course populate that value within this variable called current close. Now what we can do is actually put in conditions to say that if the current close is greater than the EMA, then we want to go long. Likewise, if the current close is less than the current EMA, then we want to go short, or else no trade. Now most of the time it won't actually be no trade unless the values are exactly the same. Then it will produce no trade, and that's because it is indecisive or inconclusive. So, and that's the next thing that we're going to do, which is what essentially we've done. We've put in our conditions next for our MACD, so we're going to be doing the same thing over here. Now I'm going to copy the code that I put in just off screen, just for time purposes, but that is it over here. So we are submitting EMA long and short trades. So we've got our if statements here. So if the current close is greater than the current EMA, so if price is above our EMA line, then we're going long. Likewise, if the current close is less than the current EMA, so if price is below our EMA, then we're going short. If for whatever reason they equal the same, then it's no trade. Now let's compile this, and we've got no errors, which is good. Let me just tidy this up, and let me put in a comment. Price let's check based off EMA and close price. Perfect. Compile that. Beautiful. Now the very last thing that we need to do is of course put in those conditions based off our enter trade. So now just going back, now that our custom function is complete, if you recall that our open signals EMA will of course run our custom function, and basically this variable is going to return whether it's long, short, or no trade. Now what we want to do is when we enter a trade, we want to be checking our open signals MACD equals long, as well as equals long, as well as of course our EMA. And then likewise, I'm just going to copy this across and change this to short. Compile, no errors. So what we're checking is when there is a crossover of the MACD, and if our price is above our exponential moving average, then we're going to be, of course, entering in a buy trade. Now, likewise, if our MACD says to go short, or we get a bearish cross and our price is below our exponential moving average, or our open signals EMA is telling us to go short, then we're going to actually sell or go short. So that is all working, and now we can actually test to see if this works. Compile. Beautiful. Now let me go into here, and we are going to have a test. Now, the first thing to note is we have in our call out here EMA long, which is really good. So price is above the exponential moving average, which we can see in this red line, which is good. And this is telling us that it's long. Now, of course, it hasn't entered a trade because it's waiting for a crossover of our MACD line. So this is just, I guess, waiting there for a bullish crossover of our MACD line. Now, notice here, it's told our MACD to go short, but our EMA was long and it didn't actually enter a trade. And that's because both conditions weren't the same. Our MACD crossed over long. Oh, sorry, our MACD crossed over short, but our EMA was telling us to go long. Now, let's see if we actually get a bullish crossover of our MACD whilst it's still going long. And let's see if it's working. Now, looks like we're trending up. Let's confirm a crossover here. There we go. We've entered a trade. So notice there, oh, I've just missed it, but notice there you would have seen it. If you didn't, you can rewind it a little bit, but our MACD buyer said long, and our EMA said long, so it actually entered a trade. We know it's entered a trade because this trade has come up over here with our stop loss and take profits, as well as it's come up over here in the trade history down over here, which is really cool to see. Now, the one thing that we want to change is we would have noticed that we actually had or entered this trade based off our MACD crossing over above the zero line. Now, for the trading strategy that we're going to be, of course, showcasing today, we actually want to only take trades or long trades if the MACD, or if the crossover of the MACD happens below the zero line. The theory behind it is it's overextended short and we need to actually go long. Now, likewise for shorts, we want to be taking crossovers above the zero line, and an easy way to do that is to check whether our MACD signal line and our MACD line are either, well, for longs in the negative region of our MACD, so whether they're both negative, and likewise for shorts, we just need to check whether our MACD signal line and our MACD line are in the positive region or are both positive or greater than zero. So that's an easy fix to do. So I've just stopped that. I'm back in MetaEditor, and we can go to our MACD signal. There we go. So the conditions for our MACD over here is, well, these are the crossover conditions. So if the prior MACD is less than the prior signal and the current MACD is greater than the current signal, then we're going to be going long. Then we can add in additional conditions over here. So for example, and for me personally, I like to use the current MACD instead of the prior MACD. So the current, of course, is the most recent one. So I want to check to make sure that the current MACD, and again, this is for longs, is less than zero, and the current signal is less than zero. So if the current MACD and the current signal lines are both less than zero, that means that the crossover would have occurred below the zero line, which means we can actually go long. So in other words, if the current MACD is greater than zero and the current signal is greater than zero, then we're actually not going to be taking in trades, even if there is a crossover. Now, what I'm going to do, what I'm going to do is copy this code and just change this to greater than. So then that way we're doing the same thing for shorts. Now we're only going to be taking shorts if the current MACD and current signal are greater than zero. So if the crossover happens above the zero line, then we're going to be going short, because that means that we are looking for a reversal and the trend has finished at the for this particular segment, and we are now going to go short. That is the theory behind it. And so we're not going to be taking any short trades or continuation trades if the MACD crossover happens below the zero line. And that's just what we're going to be doing for this. Now, if I go back to our strategy, we will see hopefully that that if our crossover happens above the zero line, or if there is a if there is a bullish crossover above the zero line, it's actually not going to tell us to go long. It's actually going to say no trade, because that's the additional filter that we put in on our trading conditions. So this is a short, and that's all right. So that says short, and that's good, because we can take short trades if the crossover happens above the zero line. Now it didn't enter a trade because of course the EMA is above the or the price is above the EMA. Now this is a really good thing about expert advisors and coding them, is it's very, very rigid and based off the rules that you give to your expert advisor. Now we're going to actually have the crossover here, but notice that's the crossover. That's where we entered the trade last time, but it still says no trade. And that is because the crossover, or a long crossover, happened above the zero line. So that is actually working good. Now let's just keep this running just to see and make sure that we do get in a trade. And just to make sure that everything's of course working. Now we've had a bearish crossover there, but there's of course the price is above the exponential moving average, so they weren't the same. Let me speed this one up a little bit. The price is still above the exponential moving average, but we're getting longs. Looks like something's going to change. Maybe not. So once the MACD goes below the zero line, we can actually start looking for longs. As you can see, it's not really doing much at the moment. Well, it's not allowing us to enter a trade in at the moment. Well, this is a bit boring. We'll let it sit for a little bit longer. We'll eventually get into a trade when the conditions are right. All right, here we go. Looks like something's going to change, hopefully. Getting some chop. Here we go. We should get a crossover here. That's a long signal. There we go. Perfect. So we've got a long signal. Both our MACD biased long and our EMA biased long have, of course, well, both said long, and based on the conditions, that's when we, of course, can enter a trade. We've entered the trade over here. We've got our first trade that's noted over here, and so let's check our conditions. We, of course, have price above the exponential moving average, so we can look for longs. That's our filter. Good. We've had a crossover of the MACD line, and this is a bullish crossover, which is good. And then finally, we've had the crossover of the MACD and the location of that crossover happening below the zero line of the MACD, which is good. So we've entered the trade. And so we can see that our code is actually performing quite well. Now, there are a few things that I just want to preface, is that this code is, of course, not nowhere near complete. And that is because we need to actually put in further conditions of our trading strategy, because there are going to be some errors that are going to occur. And we might actually see one of those errors happen right now. If we get another long condition, there we go. So what happened here is we were in a trade, a long trade. And based off the conditions, we actually had no signal, or no signal from our expert advisor to actually close the trade. So we were essentially long for the trade. Now, since then, the MACD line actually crossed over bearish, and then it crossed back bullish. And because we had no signal to actually exit the trade, and that is because, well, our code doesn't actually tell us to exit the trade, as well as we haven't hit our stop loss or take profit. What's happened here is we actually had another signal to go long. And I'll just move this across here. And we can see that over here, our MACD says long and our EMA says long. So because we've had another signal to go long, what's happened is our expert advisor has actually closed all of our current trades based off our conditions within the code. And that condition is when a new signal happens, process open trades happens, and we can go to process open trades function, process open trades over here. And what happens is there should be a section over here. So every time a new trade opens, it closes any of the previous trades. And that's what's happened over here. And this is how it actually should function. So if there's any open trades, it actually closes the previous ones before opening into the next one, just to be safe. Now, what's actually happened in our trading strategy is because we've had another long signal, what's happened is our long signal actually, well, our previous trade, which was long, has actually gotten closed, and then we've re-entered long, which is of course a silly thing to do because we are actually paying on well, commissions as well as spreads, and it is very, very inefficient. So instead of keeping the first trade open, it's actually closed the first trade and re-entered long over here. And of course, that is no good. So that's the end of this video. I do hope you enjoyed it. I hope you have followed along and you can now get up to this stage for your expert advisor. Now, I just want to say well done to all of you that are following along in the series. And again, thank you for your patience. For my neglect on producing additional videos, I do apologize for that. However, saying that, thank you so much for all of your support. Really appreciate it, and really appreciate all your questions and comments that are coming in. I do see all of them. So with all that being said, have a very good rest of your day. Happy coding, happy trading, and I'll see you in the next one.